Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update from Monday, April 5th, 2021. What I'll do in this video is hit on the markets, most importantly the breakout in QQQ and the NASDAQ 100 today, as well as a couple of the market-leading FAANG stocks, big tech. That's where we're seeing a lot of some bullish developments today, undoubtedly. I also want to do an update on gold and the gold mining stocks, the euro and the dollar, which go hand in hand with gold, crude oil, nat gas, and then a few of the ag commodities I've highlighted recently: sugar, lean hogs, soybeans, and we'll maybe an update on lumber. Some of those being set up, some of those actionable trades. All right, start out with QQQ. Again, there was an update this morning, and this is where we parked today on Friday or Thursday. Remember, the markets were closed in the U.S. on Friday for Good Friday, the holiday, and that's where we close. And then this is an unmistakable breakout. 110% bullish until unless this fails. That's what the MO in this market has been. Whipsaws are fairly common in recent, really in recent years. But we went down. We hit that key 297 support, which was the second target on QQQ, and those positive divergences that were put in on the 60-minute chart of the futures did end up playing out for a pretty decent bounce so far. So that, of course, this breakout today minimizes the chance that we're going to go on now anytime soon and hit that 283 target again until unless this fails. And so we just watch it right now. It's like I said, take it on face value. That's bullish. And if we happen to fall back down solidly back below 324, this would then prove to be a whipsaw signal. But as of now, it's a breakout. Again, this is that recent trading range. I don't want to harp on it too much, but it was a big level to me, and it's been taken out, and it's been taken out impulsively. We're up 1.75%, and I will point out first resistance level. We have some minor resistance here. There was a gap back this line. I'm going to extend that line out. So we go like this, extend, and that's where we're at right now. So we're at the first resistance level, and really the only resistance level other than the previous all-time high, the reaction high right there. So just wanted to point that out. So if we power on through here and print a solid close or solid breakout above that level, that's going to be an additional bullish technical event. Any pullbacks to that 324.65-ish, give or take the top of the trading range, could provide an objective long entry with a stop or add-on with a stop somewhat below. So that's that. And there's really, again, not much between QQQ and new all-time highs. Some of the FAANGs have already taken out their previous all-time highs. So I'll hit on those real quick. Let's just look at the FAANG stocks. Apple. Apple is testing, currently coming up on that 125.75 former target / support. It was right here. That was hit. We put in that divergent high, breakdown, sell signal there. Got below it, and we continue to back test it. Look, the only way, well, I shouldn't say that, there are no absolutes, but most likely the only way Apple's not going to go ahead and break out and rally from here is if the market turns down and fails this breakout. But so that's a potential trade idea. If Apple can clearly take out 125.75, should run back up to that 130, what is that, 138.36-ish resistance right there, and then that puts us within spitting distance of all-time highs right there, that previous high. So we'll one day, one stock at a time. If Apple takes that out, it's also going to take out the 50-day moving average, that yellow line right here, and again, that would be an additional near-term bullish event. Should it get rejected here, then you want to watch for a break of the recent lows, and you have the 200-day moving averages just below it as well. If they get taken out, that would still open the door for a move down to that 106.48 bottom of the trading range there. And if this scenario plays out, if Apple can't get above there, we get rejected, the sellers step in here, that could likely and would likely be the catalyst for this breakout today in the NASDAQ 100 to fail. So let's take it step by step, day by day, minute by minute. As of now, the market is broken. or I should say the NASDAQ 100 index. All right, a couple others to note. As I mentioned today, nothing but bullish action on Microsoft, because Microsoft took out the recent trading range right here. It's been locked in, a very tight trading range, bouncing between there. Talked about, these trading ranges acting like energy, building up like a coiled spring, and a breakout. And we also took out today, we took out the trading range and that previous all-time high. That puts Microsoft at a new all-time high. And again, bullish until unless it fails. Nothing, and I mean nothing, surprises me in this market. So we'll just stay on our toes. And if you're long or went long today, or anytime recently, stop somewhat back below that range. And again, you want to take this collectively. You want to look at what Microsoft's doing, what Apple's doing, what Amazon is doing, all those, not just any one stock, unless you're trading that one stock. But even then, even let's just say you're trading Microsoft, I think you're doing a disservice if you're not watching the other FAANGs, because if you start to see those, let's say, fail their breakouts, fall back down, or get rejected off resistance like Apple, which again, Apple hasn't broken out today, it's testing resistance now, then that increases the odds that those, one or two that are broken out would fail. Amazon, holding that key 29.43 level, hit it, tested it for several days, and it's above it. Still kind of locked in a multi-month sideways trading range, so there's really nothing major here, other than we did have recently this range. We're kind of peaking above it, so it's a common theme. A lot of these FAANGs are breaking out. If they can hold and build on today's gains, again, near-term bullish. And if they fail that and fall back down, then you're probably going to head at least to the bottom of those recent trading ranges. Alphabet, the two share classes I have here, we'll look at this one, GOOG. Again, just a very well-defined recent trading range right there, and a solid breakout. Here, I'll zoom in. You can see it nice and tight. There's your previous all-time high right there, 2152.68, back here at the top of the range on February 16th, and a big green candle through there. So again, unmistakable breakout, bullish. PPO turning back up at the zero line right there. It's a good trend indicator, keeping that trend bullish. So that's that. So there's check marks across the board today, and I won't go over each and every one. I just wanted to cover those market leaders. So those are the levels now to watch. If we can build on these gains, great. You can trail stops up, but if we fail that, then you want to maybe act quickly to close some longs and or reverse to short should that breakout fail. Or I should say, should the majority of these breakouts fail. Okay, that's the market. And of course, there's the NQ, NASDAQ 100 futures, same thing. Big resistance right here recently. This resistance zone. And that was taken out this morning, and it has not looked back yet. So that's nothing but bullish right now. Any back test should hold on or around that level there. Let's say we, were to sell off today. That should act as support going forward, because resistance once broken becomes support. Anything much more than that would be a failed breakout. Other than that, the breakout is clearly intact right now and is about as good as it could look. A lot of impulsive buying so far today. Small caps are sucking wind compared to the large caps, but that's not unusual. Today is clearly rotation. Money is getting sucked into those large cap names, and so what you had here also minor uptrend line on IWM or RTY. I'm sorry, these are Russell 2000 futures. And we ran up right to that 2301. It's a level I've had here, big level for a while. It was resistance. We had a breakout, which proved to be a false breakout. The breakout failed right there. As I often say, fewer things are more bearish than a failed breakout. And again, so that's what we'll watch for, should the breakouts today in the NASDAQ 100 and some of those FAANGs fail. Otherwise, then you have to treat it as bullish unless it does. So, and we had a different posture here too. On the NASDAQ, or on the Russell 2000 or RTY small cap futures, you had a clear uptrend line and clear negative divergence on the breakout, which increased the odds that it would fail. So there was a back test, and then when it gave it up, there it is. So that's that. Anyways, I just want to point out that's a pretty big level, and that's where we rallied into, and so we've seen some profit taking and weakness. We're about flat right now in the Russell 2000. Here, let me show you the IWM. There we go. That's what IWM looks like. There's your primary trend line off the March lows. We'll continue to watch that. That's still a potential target, especially if the market turns down. But again, we came so close to it before, within just a fraction of percent right there a couple weeks ago. So maybe close enough. Sometimes you get close enough to a support level, and then the buyers will step in if it's a well-watched level. But either way, there's the posture of the IWM on the daily time frame, and 60-minute looks like that. Oh, let me jump back to the Qs. There's the Qs on the 60-minute. I showed you we were at resistance, that gap resistance. Here you can see it as well in the 60-minute chart, and these other reaction highs. Reaction high, reaction high, reaction from below, so reaction low. Another reaction, there's a gap, and that's where we're at now. So that's right about 330. So again, bullish if we can power on through there, and there's really nothing between this 330-ish level on QQQ and that previous all-time high right there as far as resistance goes. And gold's still looking good. Remember, gold hit recently, once again, the bottom of my long-term buy zone I've had for out there for a while. And this is a 60-minute chart. I'll show you it on the daily chart in a second. So far, a double bottom, kept the divergence going here on the 60-minute chart. And I'm liking what I'm seeing in the dollar and the euro. And there's the recent highs right there. This level, let me give you a number. Gold needs to take that out to run. I'll do an update on GDX here in just a second. About 163.50, give or take. If so, that should trigger a nice uptrend in gold. We can even put a trend line right there, a downtrend line, which will be taken out as well. And so that's what the 60-minute chart of gold looks like on the daily time frame. Remember, this is the buy zones right here, been laid out for many months. And you zoom in closer, we hit the bottom of it twice. And so far so good, but there's the recent really range, and there's that same level I just showed you on the 60-minute chart. Needs to get taken out to open the door to more upside in gold. One thing that I did want to mention too is the dollar futures and the euro. Let me find that chart for you. Here we go. Let's update this. And so this is what DX, the US dollar futures, look like on a 60-minute time frame. Back here, you had a divergent low. That was bullish for the US dollar. Then you had a breakout of the wedge. Remember, dollar tends to trade inversely to gold, meaning when the dollar is going up, that tends to put pressure on gold. Gold tends to go down. So this was part of the catalyst here for the correction, recent correction, and pullback to that target zone, this rally in the dollar off this divergent low right here. However, we just put in a divergent high on the 60-minute time frame. There's your divergence line, negative divergence on both the RSI right there and the PPO, and you had this minor uptrend line right there that was just taken out, and so far the dollar moving down. So if this continues, as I would favor, that should be bullish for gold, help the case for additional upside in gold. And let me show you the euro as well. You know, this is a chart in a scenario that's been highlighted now and laid out for many months. This is the bigger picture, the euro US dollar pair. Weekly chart, primary downtrend line, divergent low back here was the catalyst for this rally that took us up to test the trend line. Then we put in, had a rejection off the trend line, another divergent low right there, and went on to break out above the trend line. That's bullish. And so at the time, laid out some targets here and a scenario which has now happened that we could come back in and back test, especially when you zoom in real nice and tight. You had the uptrend line here in the euro US dollar pair. And by the way, since we're looking here at the euro against the dollar, this moves hand in hand with gold. In other words, when the euro or EUR USD is going up, that tends to mean gold's going up because the dollar's falling. Likewise, when it drops, gold tends to drop. So what we had recently, as highlighted, is a back test of that long-term downtrend line. So there's your breakout, back test, and we could get this off the back test. We had a divergent high there, so a correction was in store for the Forex pair. And so I just want to point out that this, so far, a perfect back test of the long-term downtrend line, and a bounce. It's not been much, but again, that 60-minute chart helps to confirm it with the breakdown in the dollar, and so that should be net bullish for gold, especially if it continues to play out. GDX, the gold mining ETF, when gold hit the long-term buy zone, support zone right here, GDX also hit its comparable support level around 31.33. Again, not by mere coincidence. It trades in near lockstep with gold. And there's your downtrend line, a breakout. So you had positive divergence, which is bullish, at support. And there was opportunity number one, or objective long entry number one. The breakout was another objective long entry. So was the back test of the trend line and the pullback again to 31.33 support. And nothing huge so far, but since that last back test, it's about a 7% lift in GDX. And just like gold, it's coming up on some resistance overhead that it needs to clear. It's not a hard, well-defined level, but roughly that about 34.50ish. And if we take that out, and gold takes out the comparable resistance, that should open the door for another leg up there. So like in the miners and gold still to this point. All right, and that's that. Let's look at crude oil real quick. CL, do a quick update there if I can find my chart. Give me 1 second here. There it is. Okay, CL rejected at the downtrend line. So we've had these targets here, and we still have some potential additional targets there that may end up being hit. It doesn't always, crude tends to move along with the stock market, but not always. Sometimes it can do its own thing and march to its own drumbeat. So we'll just have to monitor this. What I can tell you is that so far we were rejected at the downtrend line right there. We hit my first target there, second target zone there, third target zone, and when we hit the third target zone, that's where you got a decent reaction so far. We've had a bounce, a rally up to the trend line, but so far a pretty impulsive rejection, and we just took out the 58.85 support. So we may run down and come at that T3 level again. Let me tell you this: if the breakout in the Nasdaq 100 were to fail, I would put extremely high odds that crude's going to come on down here to that 54. Next target, potential target, about $54 a barrel, and possibly down to there that 51.72. Remember that those levels are defined by this trading range here, and there's trading range. Boom, there's a breakout. Again, this is energy like a coiled spring building, and you had one of the biggest rallies in years after that breakout in crude. So that's where we're at. Again, kind of keep an eye on the market, but you can trade crude individually, and it's also can be somewhat of a hedge. You could be long equities, short crude, and sometimes that trade will work out. Sometimes it's very often a highly correlated trade, but not always. And you can see today, certainly not. Crude's down almost 5%. CL crude futures. Let me give you an update on natural gas as well. NG. I did an update on the homepage today. We took out the trend line that was suggested as a stop for active traders right there, and you can see once that broke, it was not even close. It was a swift drop. In other words, it was a well-watched level, and nat gas dropped about 4% from the breakdown there. So that's what stops are for. And then it went on to take out the second stop for a longer-term investor trying to swing, get a higher, catch part of a possible larger trend, and that support was at 526. That was also taken out. So in one fell swoop today, we took out both the trend line and the 526 level, and we're trading below it. So that pretty much would have taken out just about any reasonable stops on a nat gas long trade, and that was after it hit. Remember put into the divergent low here, took out the trend line there, back tested, and went on to hit that 2675 target right there, resistance, which was pretty good resistance. You could see a lot of reactions there, and just couldn't get through that one. Okay, a couple more I like. Sugar. I mentioned, I've been on highlighting sugar as both an objective long entry at support recently, as well as an additional buy signal to come on the breakout above the bullish falling wedge, which we since had. My last update was this morning, posted a static chart. We were testing the top of the wedge. So there it is. This is our support zone, which we held. Again, pretty well defined. Lots of reactions on that level in recent months. And there's your breakout today. So that's objective entry number, well, number 1, 2, 3, how many times, any time it's in that range is objective. And then of course on the breakout today, so that should open the door, unless the breakout fails, for move up there. And if we go and back test again, you want to have your stops a little bit below that support zone. And SGG, by the way, is the ETF or ETN if you want to trade. There's also Kane, but we'll just look at SGG. Pulled back to that 46.70 support right there, and that could lead to the next leg up. Commodities, are remain in a solidly entrenched in what I believe to be early stage bull market price action. But there's going to be corrections along the way, so that's what I'm looking to trade. Either get out, take profits when charts are warning of a correction, divergences, trendline breaks, things like that, and or short for a quick trade, and then recycle back in. So that's sugar, and the other ones I'm watching are HE. That's right here. We have lean hogs. HE still waiting for a break of this trend line. We had that little whipsaw there, but we're respecting that trend line, put in a divergent high. And again, this is one that's had a nice healthy run, so it's just a looking for a correction within an ongoing bull market. And these are still the current targets right now: T1, T2, T3, T4 zone. Again, if we get a sell signal, I'll go over this chart and do an update there. That's HE, and ZS are soybeans. And this one's kind of been bouncing around. We had a primary uptrend line here that was recently broken. We put in a divergent high right here, and recently about equaled that high. So that's still divergence when you have flat line prices making equal or higher highs, and the indicators making equal or lower highs. You have the divergence there, and so we really need to. We had a little whipsaw below that 1384-ish support right there, but it was again a whipsaw, and it was very quick, and we snapped back above it. So we need to take that level out and to open the door to more downside there. So there's another one looking as a potential short setup, as is LB, which is LB is lumber futures. Let me find that one for you. Here we go. LB again. A nice setup. It's in a bull trend, make no mistake about it. Lumber is going to go up as most likely as long as the stock market's going up, because the stock market rising shows forward-looking growth expectations for the economy, and therefore the housing market. And the big question, I went over this, the move has been very, very strong. I mean, just going back to right here, in January, just since the beginning of the year, we've doubled in lumber prices. So the big question is not if, but when is this going to put the brakes on the housing market, because lumber is obviously one of the biggest input costs to building. Anyways, there's the trend line we need to watch. Break of that trend line should take us to the larger uptrend line and or that 921.51 level, and then potentially down here to these additional targets you can see marked. So again, this is a trade setup, not an actionable trade. Need to take out the minor trend line there, and then I'll extend that line later. All right, the other ones, that's it. Let me see here. Let me just double check my notes. Yeah, that's about it. I mentioned last week, in the last couple weeks, FXI at support, Chinese ETF, one of several Chinese ETFs right there, but back testing that trading range. Again, that was a multi-year trading range right there, shaded in this box. And so that's it right here. And we had the breakout, back test, put in that divergent high right by that other high, put a correction, but we back tested that range, and so far a decent bounce, nothing huge, but from that low right there, it's about 6% or so. And yeah, on this one you'd probably just set it and forget it. If you're looking for new highs in FXI, stop below the recent lows or that 45.75-ish support level. Okay, so that's it. We'll wrap this one up in 24 minutes. So like I said, breakout in the NASDAQ 100, as well as a lot of those market-leading FAANG stocks. That's near-term bullish for now, unless that fails. And I'll continue to look for other trade ideas, particularly diversified right now, looking at some commodities, some long, some short. But as of now, the equity market in the U.S. is strong with both the, of course, I didn't mention the SPY or the S&P 500 still at new highs right now. So that's no change, and the divergences continue to grow. So what I gave you today, talking about the Nasdaq 100, that is all near term. That is near to intermediate term bullish. Those breakouts. Longer term, nothing has changed. When you look at the daily or weekly charts, divergences continue to build. But divergences, remember, are not sell signals. They're conditions that are forming in the market. And so at this point in time, the only sell signals that I could see on the horizon would be, again, a failure of this breakout today in the Nasdaq 100 and some of those market-leading FAANG stocks. All right, let's wrap it up here. Get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.